The markets don't seem too worried, and the markets so far, Dan, are saying we see a quarter-point hike next week from the Federal Reserve, and they might kind of cool it this year or slow this year. Do you buy that?
Yeah, I think the market likes what it's seeing, particularly because the market has been so tied to what the Fed does, and all the indicators now are going the Fed's way. Not necessarily, Neil, to the American public's way. Yes, inflation is coming down, as John just alluded to, because of the wrong reason, instead of pushing up supply so supply and demand meet. That way, we're pushing down demand so that we go in balance. But let's look at what's going on with these layoffs, right? And it's going beyond big tech now. So you look at Hasbro laying off thousands, 3M, same thing. So what's that tell us?
Yeah,
that's starting to tell us, as John said again, inventories building up, production coming down. So that GDP coming down, now we're talking recession.
Now, these layoffs are significant. I don't mean to make light of them, but they are, in percentage terms, relatively small. Do you see them accelerating?
Yeah, what I can't figure out, with so many announced layoffs, why are we not seeing more in terms of first-time claims for jobless benefits? I mean, we now have initial state unemployment claims. Yeah, I don't know.
Some of these are announcements.
Announcements that hasn't happened yet.
Yeah.
But, you know, at the same time, high-tech, major industrials, and banks are announcing major layoffs. I also read that fast food chains are announcing plans to dramatically increase hiring.
Look at Chipotle, 15,000.
Okay, this is important because we're going to get a jobs report next Friday. And during November and December, we had decent readings. We thought they were pretty good on jobs creation. But if we look closely, 65% of the new jobs added in November and December came from the not-so-hot job categories of healthcare, private education, leisure, and hospitality. That includes restaurants, hotels, and entertainment. These are not necessarily high-paying jobs.
Well, some in leisure and hospitality are, and you can't, you know, dismiss what's happening. The only reason why I mention that in the context of all these airline CEOs, Dan, this past week, who said our planes are full, bookings are looking solid right through the summer. So there does seem, maybe to John's point, this disconnect in some areas, or is it a delayed effect? What is it?
Well, you have to look at where people are spending money, Neil, right? So if you look at the data that's been coming out, you see that savings rates are starting to go up to 3.4%, right? People starting to spend less based upon the December numbers. But if you go in a restaurant, if you're in an airport, places are packed. So people are changing how they're spending money. They're looking to spend money more on experiences. Let's go out, let's go to a restaurant, let's travel, let's go on vacation.
And that could be like a COVID thing. They were trapped inside. They're getting this out of their system.
But not all jobs are the same. I'd rather be working at Google, I think, than working at Chipotle, okay?
I don't know. I take Chipotle.
If it's all you can eat, right?
Gentlemen, you're the best. Thank you very much. Food for thought. See what they do there.
Okay.
All right, Jack.